watching Tesla crash has been difficult. How would you change your valuation of Tesla with falling margins and uncertain profit expected during the coming recession? Any reason to hedge now? So first of all, I think it's too late to hedge at this stage because it's down so much. It fell so fast. A lot of it has to do with Twitter and all of that kerfuffle. But they did make about 439,000 cars in the fourth quarter. There were a lot of logistical bottlenecks out there, as well as a lot of stuff that Elon Musk was trying to resolve. But it's pretty clear that he took his eye off the ball over the last 2 months, and that has had an impact on numbers. It shows you how influential the man is. Perhaps he does believe Tesla will run by itself with or without him. I don't quite agree with that take. Their deliveries fell about 34,000 vehicles short of production. And we don't know where margins are yet. That'll come out in about 2 weeks, but we'll be definitely having our eye on that. Now let's look at some Tesla numbers, and I'm going to spend a bit of time on this because it's very, very important. First of all, this is the Tesla Q4 and full year 2022 numbers. So they did beat the production consensus, which is good. They came in at 439,701 cars that they made in a quarter, which is stunning. But they didn't deliver as many, and that's the problem. They missed delivery. The delivery expectation was at 420,800. They came in at 405,000. That's why there's reports of tons of cars being at big shipping ports and airports and all sorts of stuff. Now, the FY 2022 deliveries were up 40.3% over the previous year, which kind of makes the 40% number. But it wasn't the 50% number. And the FY 2022 production beat 1.369 million vehicles versus 1.331 expectation. So that's all good. There's one thing I do want to point out in this chart here, and I wrote it in. The amount of deliveries that they missed of that certain amount of cars, whatever that is, 20 or 30, say 34,000 vehicles, that's only 13 days of inventory. Okay. If you look at other car companies, they have many, many months of inventory available in some cases. So that is one issue to look at as well. Let's talk about a few other things as well. The price models that I put together, and this quick sheet here is from Troy TSLA, but I don't take into account the FSD take rate, which is like $15,000 a pop right now, the insurance business, which is small but growing, energy storage or the energy business like solar panels, the semi-truck or bots, and all the other good stuff. It's just purely based on cars. And the other thing as well, I'll give you one example of the numbers kind of I'm crunching right now, which again, Wall Street don't look at. I'm on with Gary Black, and hopefully he'll add this to his spreadsheet going forward too. But I've been crunching numbers now. I want to say one thing before I talk about the capacity, is this is based on public statements made by Tesla, their CFO, that they have sufficient battery supplies for the first time ever to really focus on their energy business, because they didn't have that before. So they had to push all the batteries into cars. Now they can push them into megapacks, which is a big one going forward. So this is based on disclosures from Tesla, not from me. So they have a factory in California here in Lathrop, and they believe they can easily do 10,000 megapacks a year. Now, the cost of these megapacks is all over the place. It's anywhere from 800,000 to 2 million or more than 2 million, but I assumed 900,000 being the bear case and 1.8 million being the bull case. That gives you revenue. Margins on these megapacks are apparently everybody I've spoken to is at least 50%, but I assumed 40%. And the bear case, 50% in the bull case. And the profit attributable per this product line in the year 2023 could be, wait for it, $3.6 billion in the bear case and $9 billion in the bull case. But remember, this is pure profit. Now, the per share, earnings per share impact of this is $1.20 per share on the bear case and $3 in the bull case. By a multiple of 25 bear case, a PE of 25, would give you basically an added value to the share price of $30 in the bear case and $90 in the bull case. So this is an example of how you can pull apart these other areas of business that they have and add a lot of value to the actual stock price. But nobody does that. That's the weird thing about Tesla. There's just so much value to unpack. The other issue is, where did the cars go? So needless to say, China was hit very, very hard because of zero COVID and recession. A lot of people lost a lot of money with real estate, but they are opening up again and the economy will grow again. Okay. Now, this should bode well for 2023. If they open, okay, you can see here 43.4% of the vehicles are sold to China, but at the same time, they're just opening other markets like Taiwan, etc. And that's about, rough back of the napkin, about 584,000 cars are sold in China, or 0.0004 cars per person. So we'll see. Again, it's been a brutal year with COVID lingering stuff, supply chain issues, bottlenecks. It's been delivering vehicles has been a huge challenge. And in Q3, Tesla, Elon Musk and the team said they could have delivered vehicles, but it was so expensive to rush them out. So they didn't. Now let's talk about another factor here. And I'm not making the case for Tesla. I'm just sharing data. You can do whatever you want. But this is a visual of the production ramp of where we are today. And again, people think, oh, well, there's no demand for the cars, etc. We'll talk about that in a minute when we talk about demand levers. But if you look at Fremont, how much they're producing versus Shanghai, they're the two big factories. But Shanghai only really just started. It's new. It's now doing nearly 800,000 cars a year. Texas, Berlin, and Nevada haven't even gotten off the ground yet. And what this looks like in terms of numbers, you can see, I believe, full ramp for Fremont would be about 650,000 cars, so they can still grow 18.9%. Shanghai, 26.89%, based on, by the way, that 913,000 cars a year is based on 4 times what they produced in Q4. All right, that's where that number came from. Texas, I think they could do 300,000, but they will be making complex cars there, like the Cybertruck. And Berlin, 300,000, mostly Model Y, but they're going to change that as well. But just look at the upside: 645% more cars on Texas, 460% more from Berlin, and of course Nevada. They believe they could do 1,000 trucks in a year next year, or this year in 2023. I don't know if that's going to happen, but the point is, they can build more than the 40% growth. The question is, and this is what every Tesla investor has to ask themselves, can they sell what they make? And this is the problem. So net on all of this discussion is growth is 40%. The 2 gigs are ramping. Inventory is 13 days worth. 50% growth would mean this year, 1.97 million cars in 2023. But maybe 40% is the new 50%. Maybe 50% is too much of a stretch goal. But it is very easy to imagine that 50%, because if you look at Q4 production, you annualize it, it's nearly 1.8 million cars, which is very close to 1.97 million cars to get there. And Q4 annualized right now is 38% growth. But at the end of the day, it's all about how they use their demand levers. Things like tax credits, giving away free stuff like free charging, free FSD, all that type of stuff, lease deals. Again, they have a lot of levers they can pull, and they got a lot of margin they can play with. But the big point is, it's not, I always say that Tesla was a recession-proof stock because Elon Musk said a couple of months ago, they have demand as far as the eye can see. That may not be true. In addition, but they do have industry-leading margins, which means they can drop price a lot before they even start making a loss. And that is the big wiggle room factor. Now, if these guys are hurting because of demand, every other ICE manufacturer is destroyed. That's the real story here, ladies and gentlemen. So everything, I spent a lot of time on this because I want to get one point across. Everything is relative, okay? When you invest, you identify the winner, all right? The money will go to the winner. I used to call it the black hole last year. And not the second or third place, it's the winner. I believe these guys are going to be the winner. And yes, financial Armageddon, thank you, Jerome Powell and the Fed, for destroying everything. That's just the nature of the beast, but we'll come out of that as well. But the idea is to position yourself for the winners in the future that will take over. And I'm pretty convinced this is the car company